So starting off immediately, top challenges for those of you who wrote down some of the issues you're facing in your business out of the food services space. How do you grow a multi-location business in a structured, organized fashion, especially when you have multiple stores? How do you create an absolutely consistent, reliable, predictable experience, which is what a brand is all about, across multiple stores in multiple regions? How do you get the right people to do the right thing all the time, every time? It came from a business actively involved in supply chain consulting. It's an area of enormous disruption at the moment with supply chain crises everywhere. Already we're seeing a lot of it right-size itself across North America. There are going to be more sales this summer than ever before because the supply chain is finally working again and people need to rid their summer stocks. So hopefully that might dampen some of the inflation moves in the US. In health and pharma, how do you enter new markets outside of major metropoles? And that's such an interesting question for the simple fact that the way trends occur in major metropoles and how those trends start coming about in outlying areas means the stock you carry, the way you merchandise, the offers you put on the table need to be fundamentally different across the board. A one-size-fits-all is never a good solution because of the simple fact a company's built to create an experience for a customer. Branded equipment distributors, how do you delegate and make it stick and create accountability and responsibility in the process? We've been discussing and talking about delegation for a long time now. The way you delegate effectively is by understanding what it is that you delegate. Is it a set of instructions, Johan, or is it a system of activities? And we had a great conversation on that. In industrial services, how do you build a business to both sustain and grow revenues more reliably and more certainly? And you know, what's interesting, especially in the industrial landscape, because in order to grow, you have to be able to plan capacity and likely invest in capacity. Those investment decisions need certainty in the medium term. And in a disruptive world, how do you get that right? How do you build a business model that will increase your certainty so you can make proper, solid investment decisions? And then finally, in food services, how do we maintain and hold our profitability when customers seemingly are unable to absorb price increases? Across South Africa, one of the things we don't measure effectively and we don't measure well, which is measured extensively in the developed economies of North America, the United Kingdom, and Europe, is productivity. And productivity is always measured against the function of revenue to employees. It's fascinating to note that the United Kingdom, for example, runs 34% behind Germany, the Netherlands, and the United States. And government policy across the United Kingdom has started to focus on that. We haven't gotten to that level yet in South Africa, but as business owners, we should be measuring and tracking our productivity because it has a big bearing, not only on your EBITDA numbers, but also your valuation. 10,000 businesses were surveyed, and this is what we discovered. 10,000 businesses similar to yourself, established, well-worn. Oh, Hannah, you laughed when I said that. I don't mean well-worn in terms of all broken and crumbled, but experienced business owners, mid-tier companies, typically doing between 15 and 300 million rands of annual revenue. And what we discovered was this, is growth was not working. And it was not working because most business owners relied on hope. Only 14.7 of them met on a monthly basis to talk about growth. Of those businesses, the 10,000 businesses we looked at, 95% of their employees were unaware of what the growth strategy was. That's like setting sail on a boat with oars or with sails, with the crew not having any idea whether they should be pulling in one direction or another, lifting one sail or dropping another sail. When your employees are unaware of what your intention is and what your growth strategy is, how do you get them to work in concert with your efforts. Even more terrifying, 68% of these businesses had misaligned commercial functions. The cogs of every business, the way we market, the way we sell, the way we fulfill, the administration that holds everything together. If those cogs don't work well together, how do you create certainty, reliability, predictability in a business? A lot of these individuals sought help, but they never got it. So they went out and they spoke to advisors and they spoke to interim managers and found business coaches and found business consultants and secured the services of certain agencies, like lead generation agencies and the like. And what we discovered is they were grumpy about their investments because what they wanted was growth as a measured outcome, not the advice of growth, not a document on how to grow, not a piece of research insight that would suggest where to grow. They wanted growth as an outcome. Those that did, however, get growth plans, 4.9% of them said we were able to actually implement something and turn that investment into value. 4.9% out of 10,000 businesses. What does it mean for us as business owners? Well, across that segment, the 10,000 businesses, 98.7% of them would not last 6 months without the business owners being involved in daily, weekly, monthly activities. And it raises the question, what is it that you have? Do you have a business that is an asset, or do you have a business that is a job? Globally, and that's where these stats now fall away, across North America, one of the most vibrant, well-funded, exciting economies from an entrepreneurial business ownership perspective globally. 94.6% of companies started there, despite having reached 10, 20, 30, 40 years of giving value to the founder, the owners, their families, and employees, fail to sell. And the big question that becomes apparent for all of us is, why is that so? The way you build a business to generate economy and the way you build a business to make it a sellable asset are fundamentally different from each other. My name is Pavlo Phitidis. I have a background in business. I've written a couple of books. I've been involved extensively in the world of M&A and valuations, as well as starting, building, and selling businesses. I'm one of the co-founders of Aurik. We operate at this point in time across 4 major locations: South Africa, which is where our roots are, the heart of where we were born. We migrated into the United Kingdom and Northern Europe 3 years ago, and we've recently, in the last year, entered into North America. Part of the reason for that is a lot of our South African clients were driving us into these territories. They were arguing that we've worked effectively with them to stabilize the environment in South Africa, build viable businesses in South Africa, but off a South African rand and off the operating serviceable platform in South Africa, how do we get access to pound revenues or euro revenues or dollar revenues? We are not consultants, we are not advisors, we are not business coaches, and we're not trainers. We are business growth partners, and we attach about 70% of our fees to growth outcomes that we commit to delivering with our clients. Not growth advice, but the actual physical, measurable outcome of growth. We specialize in accelerating the products that you've developed, the services you've developed, to the markets that you are looking to exploit, to the markets against which you secure your growth. And we do so in a very structured, measured, implemented fashion. We work typically with yourselves to ensure that what you're building actually is an asset. An asset has 3 characteristics to it. And think of any share that you might invest on the stock exchange. You buy it with the view to secure a dividend stream. Let's call it income in your business. You buy it with the view to one day sell it. It's always the intent for a capital value. Let's call that capital appreciation or profitability in your business. And then thirdly, you buy it with the view to transact on it. It means that that asset needs to be independent of you. Building a business that has income growth, that deepens its capital value and becomes increasingly independent of you is building a business that of a day can one day be sold, which is the moment in which you realize your wealth generation, wealth creating moment. Lastly, we select our clients, Patrick, as much as you might select us. That's the nature of a partnership. We look at each other, we go through a period and process with each other to ensure we're making good decisions both ways round. Before I continue, I have a question for you. We're going to run through our origin. I'll talk briefly to problems and solutions. We'll look at the 5 levers of valuation that affect any business. We'll share some insights on how we get it done, and then I'm going to extend an invite to you. I've given you a good sense of what we do at Aurik. Our question back to you is, why do you do what you do? I'm going to run through this very, very briefly. Sorry, I skipped a slide. Our origin is that we started, built, and sold 12 businesses, now dating back to 2005. That was what we did for the first 9 years. What was most interesting is that the last handful of businesses that we worked with yielded value in half the time than the first handful. And we started to try and understand the reasoning why. Why did this happen? We then laid out a series of activities, commercial activities, which we put into neat sequences and built out a business growth system that we have now been able to deploy across 3,100 mid-tier companies. Across those companies in the regions that we operate in, the average annual revenue growth rate is running at 28.9%. On a compounded basis, it means over a 24-month period, you can expect your revenues to run at about 60 to 70%. Profitability, most importantly, is running at 32.4%. And so far, to date, where we rate all our engagements with our clients, we're running at a 97.4% client experience engagement with us. We're proud of this fact. That's one of the primary reasons why we are able to partner with clients, by saying the majority of our fees are orientated around growth outcomes. We have a good sense where the growth system itself can yield value for you and where it might not yield value, allowing us to work with you to make good decisions in relation to our partnership. Before I continue, my question to you. Today, we deliver only one of 2 outcomes. The first is an opportunity to take your business, scale it up, grow it further, and dominate segments within the industry that you play in. We do this at a local level. We can open up doors internationally. And when we talk about dominating, we talk about dominating not a sector, not an industry, but very well-defined groups of customers that operate within sectors and industries. It's where valuation comes to light, and it's where simplification of business systems becomes enormously important. It is the answer to scaling, by being decisive around who it is that you serve, with a view to deepen your business as a customer experience opportunity for them, as opposed to relying purely on product features or pricing opportunities, or the odd service that you successfully deliver through 1, 2, 5, 10 of your employees. We're talking about achieving this on a systematic level. The other service that we deliver is an opportunity for businesses well established that are looking to exit in the next 3 to 5 years. How do you lift growth prior to exit with the view to deepen your profit and to ensure that you have baked in the 5 levers of valuation that will not only raise your EBITDA numbers, but position the business for a clean exit in its own right? A lot of you are working in your businesses from early stages. You have deep attachments in your businesses. And this idea of exiting a business, having to then warranty profitability for 3 years after, whilst working for the acquirer, is seldom an opportunity that anybody wants to embrace. We firmly believe that a business can be built into a tradable asset and give you a short tenure post-exit with any acquirer so that a clean break can be made. In order to achieve this, there are 9 impediments to growth and value that we have seen universally across all businesses.
To increase the growth of a business while deepening its value, every business owner has to resolve 9 challenges that present over time. In terms of leading my business, the first is relevance. After years of effort, how do I find the inspiration and motivation to remain relevant in a noisy, forever-changing, increasingly competitive environment? Time. Most of us spend more time doing and less time leading. How do I build my business to free up my time from daily, weekly, monthly operational activities to focus on growth and value? Control. Because you carry the business's entire risk, the need to maintain control often places you front and center of your business 24/7. How do I free myself from the tentacles of this control trap and delegate responsibility to get my team to do the heavy lifting sustainably? Across sales and marketing, how do I find, win, and hold customers in a crowded market where customers have become more discerning and ever more skeptical? And how do I get this done without having to reinvent marketing strategies constantly? Operations. Why am I constantly being called back into operational activities that rob me of the time I need to invest in growing revenue and profit that would build my asset of value? Team. Why in a world where people are more skilled, educated and capable, is it so hard to find the right people to do the right thing at the right time all the time? Without this, creating sustainable and reliable growth becomes impossible. Looking ahead, how do I get my business growth formula right in a way that would see revenues and profits increasing on a more consistent basis? Am I building a job or an asset? If without you there is no business and future, then you won't find a buy when the time comes to exit. A job can't be sold. And wealth. How do I build my business into my greatest wealth-generating asset? To maximize your income and monetize your years of risk and investment through a profitable future exit, you must build in the 5 levers of asset value today. Businesses are not bought. They must be built to be sold.
So from an Aurik point of view, the way we resolve those 9 challenges, the way we take them out of the domain of your environment and business, is we work with you to configure the asset of value business growth system to achieve the following outcomes. There are 5 layers that make up the system. The first is all about positioning. This answers the question, who are your customers? What problem do you solve for them? And what experience do you create in order to get it done? Very often when we ask, what makes your business special? Individuals point to either the feature of products or services, they point to price. Very often people point to personal service. The thing about personal service is unless that service experience is delivered by a system that remains in the business once you leave, then personal service works against you. It simply means that without you there, without you ensuring it, without you guiding it day in and day out, it might not well be one of the features that sets you apart. What makes your business special in the eyes and the experience of your customers is often one of the hardest questions to tackle, answer, and secure. It's essential, however, because no business exists without customers. Once we've understood that, the next thing we need to do is create absolute consistency and reliability of that experience. We achieve this by working with you and your team to build out all the commercial functions in your business into systems which are interlinked and then operate to create that one single experience we identified in working with you to identify who your customers are and what experience they themselves require. This is the truth about baked-in, built-in customer centricity. Customer centricity is a lot more than incentivizing a sales team to work very closely and carefully with clients and customers. Customer centricity is where the entire organization itself, from a functional point of view, is built to deliver that very well-defined experience. From there, we work with you to ensure you have the right people doing the right thing all the time. How do you recruit team members? How do you capacitate and train them? And how do you delegate responsibilities on a day-to-day basis to that team in a manner that it sticks? One of the earlier questions that came through. I had an interesting discussion with my colleague Johan about a fairly large company operating right across Africa. And one of the insights that was shared by the business owner in the discussion is we've now realized finally that delegation is not about delegating instructions. Delegation is about delegating a system of activities. We further realized that a system has nothing to do with technology. It's everything to do with a series of activities placed in a good sequence that give a measured outcome that can be trained, taught, and therefore delegated. All the commercial functions that drive your business have these elements, from the way you market, to the way you sell, to the way you operate, to the way you administer, from the way you manage your teams, to the way you manage your money. All of those activities, the functions, get broken up into activities, put into sequences with measured outcomes. They themselves are systems. And what's essential is that all of these systems interlink to create that single experience for your clients and customers. These elements, once built into a business, will give you two outcomes. The first is it'll give you organic growth. You will grow your business on an annual basis by 7, 10, 12, 15, 20%, whatever your running organic growth rates are. And most importantly, it should see that occur drawing no more than 20 to 30% of your time. That time is always centered within the operations and functions of a business, coaching, managing, leading your team. The remaining 70% of time should then go to next level growth. Next level growth is all about how do you grow your revenues and profits. If when you grow your revenues, you experience chaos in the business, if when you grow your revenues, in order to achieve it, you have to grow your costs in tandem with your revenues. You never get to a position where you start to deepen your profitability. And unless you're deepening your profitability, you're creating complexity in your business. Unless you're deepening your profitability as you grow your revenues, it is a great indicator to suggest that you have not created a scalable platform against which to grow your business. Finally, the last piece of work that all of us as business owners should be focused on is as we move to a place and space where we're looking to of a day exit the business, what is the valuation method that would be applied to our business? What are the key drivers or levers of that valuation method? And how do I bake and build those valuation levers into my business, technically, mechanically, and through design? This notion that, yes, one day I will sell my business has statistically proven to be wrong. The notion that one day when I sell my business, the sum that I hope to achieve for my business is 50% luck and 50% timing is equally a nonsense. You can mechanically determine the value against which you wish to exit, and you can structurally build a business to achieve that value. There will obviously be a few nuances. There will be economic factors that were unforeseen that will have an impact positively or negatively by 10, 15%. But ultimately, everyone should be pegging a value for their business and building towards that value. It also raises one last question. A business is built ultimately to be sold, because if it's not built ultimately to be sold, whether it be 5 years, 10 years, 15 years, 20 years, it will be built to, based on stats, effectively be closed down. 94.6%. The last two elements deliver the following outcomes for you. It's where you achieve next level growth, the separation of revenue to profit, and it's where you achieve asset status, the ability to trade and transact the business itself. I want to talk briefly about the 5 levers of valuation. Effectively, across most industries, valuations run at anywhere between a 3 to 6 multiple of EBITDA. EBITDA, simply profit, where you've added back your interest, tax, and depreciation. So it's the free profit, the free cash flow that resides in your business. Whatever your profitability is, add back depreciation, add back interest. You would have already done so if it's pre-tax, adding back the tax. Multiply that by 3 to 6 on an annual basis, and that's the estimated valuation for your company. It varies from industry to industry. It varies depending on trends and economic cycles ever so slightly. But you can be sure that if you're pegging in and around 4, 5, you're more or less working at market value across your industry. So let's look at an example. Let's say there's a business that has a 10 million Rand EBITDA. And let's work on a 5 multiple, a generous multiple in today's economy. It would value the business at around 50 million Rands worth of capital value. How then does the process of buying, selling work? From the perspective of a buyer, he or she will pull the levers, the 5 levers, to depreciate that 5 multiple in order to improve their acquisition price of your business. Our job as business owners is to pull the levers in the opposite direction to not only defend the 5 multiple, but to increase it. The 5 levers make up the 5 areas or sets of questions that typically any investor, buyer uses to depreciate your value. The first one is centered around positioning. What sets you apart in your business, Hannah, when my option is to look at 10,000 other competitors that offer something similar to you, have similar products and services, can marry and match any price advantage you have today, and equally all promise great customer service? What sets you apart? To the extent that you can pull the lever in your favor and say, our products and services marry and measure up to market. Our pricing is in and around market. What sets us apart is, although we have products and services that are applicable across sectors and across industries, we decided to specialize on creating an expert experience for buyers in 3 different segments of the entire market. And we can demonstrate and show year on year, we have increased our market share in those 3 segments. In effect, what sets us apart is that we have created a supreme brand experience for buyers in segment 1, segment 2, segment 3, offering very similar products and services to the many competitors you might have looked at. When you land that argument, you add an entire multiple to your valuation. The next lever that gets pulled is, okay, how does it all work? How do you generate leads? How do you convert them? How do you fulfill and service them? How do you manage administration, money, people? As a buyer, I'm looking for a playbook. I'm looking to answer the question that without you there, how will I secure that positioning in the future as you have done so in the past? And to the extent that you're able to show me a system of delivery, the activities that make up marketing, linking into the activities that make up sales, linking into the activities that fulfill the operations of your business, linking into administration, you earn an additional full multiple. My next line of attack is, Race, without you there, who does it all? And to the extent that you can show you have created a team and that team leads, drives, and is accountable for the performance of the underlying system of delivery to secure the position in the future that you've enjoyed in the past, you earn an additional multiple. The next thing is, as a buyer, always pre-buying, I'm going to look at what growth you've enjoyed with the view to forecast that growth into the future so I can evaluate whether I will get a return on investment when I acquire your company. To the extent that you can show strong growth prior to exit and growth that in its own right not only sees revenue lift, but increases the rate of profitability year on year because you have created a simple, solid system of delivery, you get an additional multiple. And then the last set of questions is all centered on you. What relationships, Patrick, do you have in your supply chain? With your team, with your customers? Brian, what relationships do you have that without you there will either compromise the growth that you've enjoyed in the last 2 years, affect the team, impact the system of delivery, and dislodge the positioning you've managed to achieve to date? To the extent that you can show that without you there, the future of the business reflects the past that you've enjoyed, you get the final multiple. The exact same said business built in this fashion that has a market value of 50 million rand achieves a market value of in and around 100 million rand. The exact same business that would have had a 50 million rand valuation has a depleted valuation to the extent that you cannot show these levers in action. It is the difference between building a job and building an asset. I want to talk briefly how we would work with you, should we work with you going forward. Firstly, we have a very clear sense of who we work best with. The argument that you can't be all things to all people that we would apply to any of our clients that we engage with equally applies to us. We work very well with growth-minded business owners. There's a big difference between being simply a business owner and having growth intent or being growth-minded. If you're established, we have far greater impact. If you have a team behind you, our impact is executed almost immediately and felt almost immediately. And one of the reasons is that we work across the business and through the business, not only from a functional point of view, but Natasha, with your entire team too. The intention must either be to scale, grow, and dominate in a segment over the short term, the next 2 to 3 years, or ultimately to position the business for a final exit in the next 2 to 3 years. How we engage with you is as follows. The first thing we always do is arm each other with information about each other to prepare for the first meeting with each other. The asset of value presentation today is one of the tools that we offer to give insight into what we do. And when we do meet with you, prior to meeting with you, you'll notice we ask a bunch of questions in order to allow us to prepare for an effective meeting together. That bunch of questions comes through what we call the business on a page. When we meet, we go through a process of discovery, and we turn our first meeting into value immediately. We need to understand what your environment looks like today, Importantly, what do you want to achieve in the next 3 to 5 years? What are the challenges that, should we overcome them successfully, will deliver that outcome so that we can create a solution in reply and in response? From there, we put a proposal to you on how we would work, the activities we would perform, your role, our role, your accountabilities, our accountabilities. We talk to the team that we bring on board, up to 12 different facilitators with expertise all the way from strategy to marketing to sales to operations to people management to money management to business diagnostic. And we express over a period of 24 months what activities we will deliver, when, how, and why. We also then put in an estimated cost. Finally, should that proposal fit well with you, we then introduce you to our broader team and give you a try before you buy experience. We would ask you to present your business to our broader team. We have one outcome on our side. We want to confirm a good fit, and most importantly, we want to confirm that in doing what we do, we will deliver that growth outcome. It's your opportunity to then further meet part of the broader team, understand how we do what we do, understand what the experience of working us would be like, in order to, for yourself, confirm fit and confirm impact. Should we then see value in proceeding thereafter, we engage and start. The reason we go to these pains is because most of our fees are linked to the growth outcome we would deliver in your business. And it's for that reason that we select our clients as carefully as our clients select us. Once we start working, what do? The first initial period is all about running diagnostics. Established businesses have so many opportunities locked and loaded in them. Some are being exploited, some are not. We run diagnostics on all the business systems, 207 activity points as to how you market, how you sell, how you service your clients, how you administer, how you manage your teams, how you manage the money. We do contextual strategy, saying, well, where is the business today? What are the forces of change influencing the industry that you trade in? And where are the big opportunities tomorrow? We take your numbers and we wash them through ratios. Ratios give a rich insight into where value lies hidden and where value itself is not being found. And then finally, we do some leadership team dynamics to see how you work as a team of leaders in the business. With all that data, we sit down and we facilitate setting the growth goals. Some of them are strategic, some of them are in systems, a number of them are in numbers. What numbers do we want to achieve working together? And some are personal. Where would you like to be 2 years from now, as opposed to where you are today in your business as it stands? A goal is not a goal unless it has a measured outcome, and a goal is not a goal unless its achievement can be tracked and measured over the 24-month period. With your goals then set against your intention around why you're doing what you're doing, we configure the growth system by firstly always starting with how we positioned in the marketplace. Who are your customers? Run, how many are there? What problem do you solve for them? Brian, how does the problem come about? And Patrick, without your solution, what is the cost of that problem in the hands of your customers? How do they want to learn about you? How do they want to be engaged by you? How do they want to be serviced by you? How many different groups of customers do you want to tackle and dominate? Positioning is fundamental to then guide and build out the lead generation and lead conversion activities. What activities will be deployed to consolidate and capture the segments that you've defined? Once they come on board, how will you service and fulfill them in an organized manner that marries and matches to the experience they want? And how will you build and fund the process in its own right? After the system of delivery is built, the purposeful team comes into action. Delegation across all those systems, finding the right people to do the right thing at the right time on a measured basis is essential. With all of those elements involved, that typically take between 6 to 9 months in the first period of us working together. We then move towards accelerated growth. Where are we going to find that growth? How are we going to deliver that growth? And how are we going to ensure that either that growth can be funded, or when it does come on board, it comes on board impacting both the revenue line and the profitability line. The way we deliver this work to you is up to 12 accredited Aurik facilitators, each experts in their domain, work with you and your team in order to implement and activate the system of growth. It puts us in a position where your voice is heard, but equally your team's voice is heard. Because to the extent that you involve your team, to the extent that their voice is heard, they feel valued, they see and understand the importance of their role. It means accountability and ownership becomes part of their having co-created the business system that they ultimately will be delegated to in order to run, drive, and lead. As we build a system, it's delegated. As it's delegated, its impact is felt on the ground. It does not sit in a document on your desk, never to be implemented otherwise. In each of these instances, with these facilitators, each specialist in their domain, we look to build the system with a view to optimize it, and then we look actively to integrate them to create that single experience. How we track? We track the goals on a month-to-month basis with specialist goal facilitators using a dashboard that we will build out for you. On that dashboard, there's a visual system of delivery that emerges. The way that your marketing is built and functioning, the way that your sales is built and functioning, the way operations is built and functioning, administration, finance, team, governance, leadership and management, the cogs that make every business work are reflected visually. It allows us an opportunity to not only then optimize each one, but also ensure that they are working effectively together. There's nothing more frustrating than when one area of the business works and the other area doesn't work, pretty much like in the 100-meter sprint, when one baton runner drops the baton to the next runner. It disassembles all efforts of growth, creating chaos and mayhem. Avoiding that means that the systems themselves, along with the teams, need to be integrated together. We create an environment for you to delegate and manage performance effectively from a single screen, much like the captain on the ship, on the bridge of a ship would have a dashboard in front of them. Understanding where all the crew are, what the crew are doing, and ensuring that the crew are orchestrating effectively together to keep the ship sailing. We measure goal attainment on a month-to-month basis because the commitment we make to each other when setting those growth goals, Paul, is that we will achieve them in our period together. We create a data body of evidence to support not only the work we deliver with you, but more importantly, what is needed to secure funding should you need funding in order to accelerate growth, or should you be in a position where you're looking to exit. That data body of evidence provides the evidence of the 5 levers of valuation to help you with that exit. And then we forecast what lies ahead, the fundability of the business, the scalability of the business, and the valuation of the business. You yourself are in control of those elements. They don't just happen on a wish and a prayer. They are built and designed and delivered. And all of that resides on the dashboard that gets created for you. In action, a quick story. Baker, 55 years of old, 29 years in their own business, diversified right across many elements of the sector, 74 staff, had a 50 million rand revenue and a lousy EBITDA of 12%. He wanted to sell, Paul. He couldn't get the value he needed for his business. He was 54 years of age and he felt that he had another good 10, 15 years in him. So we decided to work together. He positioned in the hospitality sector. He created well-organized lead generation conversion system. To give you an idea, he used to sell only to the food and beverage manager, whose role it was to buy the fresh baked goods for the morning breakfast. He then learned, once he specialized in hospitality, that finance played a role, procurement played a role, and HR played a role. The marketing system he built and the sales system he then built then broke out into 4 streams. He continued to market to food and beverage, which he had always done. But then he started to market to finance, to HR and procurement. And through that, he impacted the buying committee that sat behind the decision to onboard his company as their service provider in these multinational hotel groups. From there, in solving the problem of onboarding fresh baked goods 365 days of the year, the operating system was built to deliver it, and a new segment was attacked, which was the supermarket segment, equally needing fresh baked goods 365 days of the year. The net result 2 years later was revenue sitting at 112 million rands and a significant increase in lift in the EBITDA numbers of that business. Why did he come to us? Firstly, we align with yourselves. Our fees are linked to growth as an outcome, not growth advice, not growth ideas, not business plans. And we don't bill hours on a take it or leave it, implement it or don't model. We live and die by the growth we generate with you in your business. Value. We bring up to 12, 13 expert accredited facilitators to work with you and your team, not just 1 or 2 individuals who might show up. Impact. Because we work with you and your team, integrating what we do right through the business, we get to implement and execute very, very quickly, achieving results very, very quickly. It's complete. It's one single optimized business growth system to create a very well-defined client experience, in other words, brand. And all of it anchors in the 5 levers of valuation and exit for what might lie ahead 5, 10, 15 years from now. It's tangible in that we deliver the dashboard, we collect the data, we report on the data, and we use the data. It's not about intuition and gut feel, as much as it is also about using data to sanitize the decisions that get taken, to architect the growth, and design the valuation that emerges. It's an affordable investment. We start with fees in and around 30% of a director's fees, or 55% of any of your sales or business development team fees, or 60% the fees of an agency. But beyond that, whilst a sales director or sales individual hopefully brings in sales, whilst an agency might generate some new leads for you, we work with you across your business, through your business, and with your entire team. And then finally, we only work with each other once we ourselves are certain we can deliver that impact. At 55 minutes to, I'm going to end off with some next steps. The first thing that will happen after today is please look out for an email that will come through from our team. There'll be a recording of the session, and please then expect a call from us. We'd love to hear what resonated, what you thought of what we shared with you today, and what you believe the next steps would be. Let's meet. Let's meet and have that initial discussion about your business. Let's understand where you are today, what you want to achieve tomorrow. Let's understand what the challenges are that you face in getting there efficiently and effectively. And let's do that within the context of rising inflation, rising interest rates, a government that seems beyond incapable of just getting the few basic things right. It opens doors of opportunity. And with the work that we have across over 3,000 companies, we bring a perspective on how to exploit that opportunity in your favor. Let's meet and understand. If we can deliver value to you, we will give you a fully costed, detailed proposal. It'll specify what we do with you, how we do with you, and why we do it with you. And on the back of that, if you think that could work for you, come try before you buy. Come into an InvestCom session with us. Over 2 to sometimes 4 hours, depending on how much you have to share. Get a sense of our broader team. Understand how a session would work with us. Talk about your business to people who have experience across the board, have seen many, many businesses, many, many different challenges, and most importantly, who absolutely love business. And should that work for you, and should it work for us, we start. And with us starting, you have a partner that will be aligned, is dynamic, and has a history of delivering some fantastic performance results for clients very similar to you in the past that only you can benefit from. We're 57 minutes to. I robbed you an extra 2 minutes, and I really appreciate it. Thank you so much for investing time with us. I hope you got value, and please look out for communication from us, and let's meet and greet and see if we can be of value to each other. Have an excellent day further. Thanks all.